In recent months, former U.S. President Donald Trump dramatically reshaped America's trade policy, imposing sweeping tariffs on over 60 countries, including several key African economies, rather than negotiating partnerships or reciprocal trade deals. The administration leaned heavily into economic pressure, raising import duties from 10% to as high as 50% on certain goods. These moves have had wide-reaching effects, disrupting industries, triggering job losses, creating a ripple effect that extends far beyond U.S. shores. African nations, once enjoying duty-free access to U.S. markets under programs like the African Growth and Opportunity Act, find themselves at a crossroads. Tariffs on exports from countries such as Lesotho reached as high as 50% before being revised to 15%, causing the collapse of vital industries like textiles. Factories that once supplied major American retailers have closed, and thousands have lost their jobs in economies already near the brink. Even modest reductions in tariff rates have not restored U.S. demand or consumer confidence abroad. Amid this turmoil, another actor has seized the moment: China. Beijing has offered tariff relief to nearly all its African trading partners, signaling a readiness to step in where the U.S. has pulled back. African leaders sense an open path toward Chinese supply chains, investment, and infrastructure projects. And with China already Africa's largest trading partner, this shift could deepen existing bonds. China's decades-long investments in roads, ports, railways, and resource extraction have left many African nations dependent on Chinese capital. And those economic ties are only growing stronger. Countries like South Africa, Algeria, Tunisia, and Libya have faced steep U.S. tariffs of 30% or more on goods destined for American markets. South Africa, in particular, criticized the move as based on flawed trade deficit calculations. When asked to accept these penalties without adjustment or negotiation, governments chose to diversify, seeking new buyers in the European Union, Asia, or Western Africa while deepening engagement with China. In Lesotho, a once buzzing garment sector suffered immediate collapse under the weight of tariffs. Even with the rate lowered to 15%, American orders evaporated, prompting factory shutdowns and mass layoffs. The government declared a national state of disaster and redirected funds to unemployment and economic relief programs. Despite Lesotho's long-standing eligibility under trade initiatives like a GOA, that support proved fragile under new U.S. policies. Meanwhile, the broader continental reaction has been one of cautious recalibration. Trade ministers in Nigeria, South Africa, and other nations signaled growing impatience with unilateral U.S. moves. South Africa, despite losses of its GOA privileges, chose negotiation over retaliation, seeing more value in forging new agreements with Asian and regional blocs. West African countries such as Gabon, Senegal, Liberia, and Mauritania were exempted from some tariffs, but only after direct meetings with U.S. officials. Reinforcing the transactional nature of Trump's policy, analysts argue that Trump's tariffs have pushed Africa into China's economic sphere, not just through trade deals, but through a strategic narrative of reliability. Beijing's willingness to absorb African exports, offer favorable infrastructure terms, and forego punitive duties stands in stark contrast to the unpredictability of U.S. trade rules. This shift offers African governments relative security and longer-term planning advantages. Global markets have responded sharply to these developments. The announcement of tariff escalations led to sell-offs in stock exchanges worldwide. Commodity prices fluctuated, supply chains frayed, and inflation concerns surged, especially in developing economies heavily dependent on exports. To the U.S. bond markets wobbled, and central banks began to forecast slower growth and rising unemployment. Even the IMF, while projecting modest global growth, warned of looming risks tied to policy, unpredictability, and trade shocks. Beyond economic losses, there is now a political dimension at play. African states feel that U.S. trade policy has become neither fair nor stable. The unilateral imposition of duties without negotiation or transparent criteria signal to many that American resistance to multilateral partnership is growing. That in turn drove renewed momentum behind regional initiatives like the African Continental Free Trade Area, AFC, FTA, designed to reduce intra-African barriers and lessen reliance on external trade partners. Some experts note that African countries can respond by opting for homegrown industrialization and innovation. With support from China, Africa's export share in global markets could rise from the current 3.5% to 4.4% by 2043. Regional trade integration succeeds. Meanwhile, African governments are urged to address logistics gaps, harmonize legal frameworks, and remove labor mobility restrictions to fully benefit from continental trade. Yet dependence on China also carries risks. Chinese infrastructure projects and imports have occasionally crowded out local businesses, suppressed wages, and created economic environments where raw material exports benefit Beijing more than local communities. Without careful regulation, Africa's resources may continue fueling external growth without generating domestic manufacturing capacity. Still, in the face of shrinking spaces with the U.S., many African leaders see stronger ties with China as a pragmatic necessity. That alignment provides not just trade access, but diplomatic backing. Beijing's non-interference policy on governance, its ability to cut deals quickly, and its capacity to build large-scale infrastructure all make it a compelling partner compared to the uncertainty of Washington. For Africans on the ground, the pain is real. In Lesotho, textile workers lost income overnight. Across the continent, agricultural exporters and mineral producers face shrinking orders and rising pressure to secure new markets. AGOAS looming. Expiration only increases anxiety. If Congress fails to renew it, millions of jobs tied to U.S. trade could vanish, along with a key diplomatic lever for Washington. In the U.S., policymakers and economists are divided. Supporters of the tariffs see them as necessary for correcting trade imbalances and reviving domestic manufacturing. Critics argue they come at too high a cost, driving global instability and alienating allies. Legal challenges are already underway. Courts have questioned the president's authority to impose broad tariffs under emergency powers. At least one federal court ruled the Liberation Day tariff order exceeded legal limits, though appeals remain pending. At the global level, Washington's aggressive approach has triggered coordinated backlash. Some nations have retaliated with their own duties or legal complaints through the World Trade Organization. Meanwhile, Beijing's soft power strategy in Africa gains momentum, fueling concerns in Western capitals about losing influence on a resource-rich continent. In summary, Trump's tariffs have unintentionally opened doors for China to deepen its influence across Africa region, poised for massive growth, yet vulnerable to export shocks. African countries now face strategic choices: resist external pressure and pivot on their own terms, or reintegrate economically with powerful global players who offer alternative pathways. Tariffs may bring short-term leverage, but in Africa's case, they are also reshaping long-term alliances. African governments and businesses now juggle the short-term pain of disrupted markets with the long-term opportunity to build more diversified and resilient economies. And in this recalibrated world, China appears to be the partner most ready to step in, where America has stepped away.